The intense battle between Donald Trump and Fed Chair Jay Powell centers on Bitcoin inflation and money's real value. This conflict goes beyond politics into inflation control and debt strategy disputes. Trump pushes for lower real interest rates to inflate the dollar and ease debt burdens. Powell resists, aiming to protect the currency's strength and guard against crypto inflation risks. These opposing stances dramatically affect Bitcoin inflation, Bitcoin price movements, and other crypto assets throughout 2024. Understanding this dynamic explains why Bitcoin value soars amid dollar weakness and increasing crypto volatility. Real interest rates impact debtors and creditors differently, shaping your crypto portfolio's future. Lower real rates favor debtors by inflating away debts, but harm creditors through dollar devaluation. Traditionally, presidents seek easy money to boost markets and gain voter support, while central banks prioritize monetary stability. This fragile balance intensifies as political pressure mounts on the Federal Reserve today. Keep watching soon as we reveal why this conflict creates risks for the dollar and big opportunities for Bitcoin adoption. Stock markets surged last year, with the S&P 500 rising 14%, reaching record highs. Meanwhile, the dollar weakened, falling 5% against major currencies, 27% versus gold, and a staggering 45% against Bitcoin. These trends indicate fading confidence in traditional money and growing Bitcoin inflation risks. Corporate credit spreads remain tight, signaling investor trust in low borrowing costs. Real interest rates on 10-year bonds linger just above 2%, too low to decisively defend the dollar's value. Crypto investors must grasp that dollar softness fuels Bitcoin inflation and broader decentralized finance growth. Economic indicators send mixed signals. Unemployment stays low but slowly rises. Tech, especially AI investments, thrives, while consumer sentiment and real estate lag. This split economy means tech giants and blockchain capture wealth gains while many Americans face financial strain. Globally, economic weakness persists, pressuring the dollar's reserve currency status further. This environment boosts cryptocurrency adoption as an inflation hedge and store of value. Stay tuned to understand how forces might accelerate Bitcoin's market dominance and supply dynamics. Ray Dalio warns that defending money's value is unpopular but vital. Central bankers perform a thankless role tasked with discipline amid political stimulus demands. I personally trade on a rock-solid crypto exchange boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. The key lesson: your money's worth depends on whether authorities resist or enable Bitcoin inflation. History shows severe inflation, like in the 1970s, forces painful tightening that devastates markets before restoring balance. Until then, Dalio predicts continued easy money and weaker dollars, creating a bullish backdrop for Bitcoin inflation and Ethereum. Will Jerome Powell slam the brakes soon? Dalio finds it unlikely until economic pain worsens considerably. The Federal Reserve will likely avoid aggressive tightening, prolonging dollar depreciation and keeping real rates low. This scenario supports current crypto trends, where Bitcoin mining and digital gold status attract investors seeking reliable inflation hedges. This ongoing dynamic suggests now is optimal to deepen exposure to crypto assets before monetary policy shifts. Don't miss acting ahead of a potential dollar collapse. Consider Bitcoin's decentralized nature offers protection against fiat inflation and political interference. As debt and deficit pressures rise, demand for Bitcoin's limited supply intensifies liquidity scarcity. DeFi protocols and staking opportunities strengthen, offering yield amid low real interest rates. This tech-driven, deflationary landscape contrasts sharply with inflationary fiscal policies, widening wealth disparities further. Understanding this interplay empowers strategic navigation of the crypto market during uncertain monetary times. If you haven't yet, hit like and subscribe to follow Fed decisions and crypto market moves. The battle over the dollar's value impacts every investor, from amateurs to whale traders. We'll continue breaking down complex monetary trends and their implications for cryptocurrencies like Bitcoin. Your engagement helps us deliver targeted content to keep you ahead of market shifts. In conclusion, Ray Dalio's warning signals a crucial monetary crossroads. The dollar endures intense pressure, and the Federal Reserve's response will shape global financial stability. Meanwhile, Bitcoin and crypto assets surge as viable alternatives amid fragility and rising Bitcoin inflation. Keep watching and position smartly, because this fight over inflation and real rates will define 2024's crypto landscape. I personally trade on a rock-solid crypto exchange, boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. Remember, This era of weak money favors bold crypto strategies. Don't let the Bitcoin inflation opportunity pass unnoticed.